Good morning, everybody. Welcome to the Flow Show. A new week begins. Not that it's going to matter because we're all going to be blown up by aliens before we get the CPI numbers tomorrow. Morning, lads.
Morning. I always thought Steve was an alien, but yeah. How you doing?
Not too bad, mate. You?
Not bad. Yeah. Nice weekend, nice weather, so I can't complain. Where's Kay? I don't see him. It's
He might
okay.
have been abducted.
Yeah. Well, they need a specimen, they're of the highest quality, the aliens, right? Of humans to study.
Yeah.
So they got K. Not the probe. No, Bran, not the probe.
No probing. No. My biggest trade signal idea today is go long tinfoil hats. That's what you want to do this week.
No, all jokes aside, though, I mean, what the hell is happening? It's I know it all started from it all started. The first thing that we heard, days ago was that Chinese balloon. But since then, they've been talking about objects that they don't understand what kind of propulsion they have and stuff like that. I'm like, what the hell is this kind of distraction? Anyway.
Yeah. One of my mates is a bit of a UFO nut, and he says it's all gearing up over the next few years for them to finally admit that there's something going on that we don't know about.
Oh, really?
This is
Okay.
soft drops or something like that. I don't know. Who knows what they're all up to? Could be the Russians, could be the Chinese, because China's out saying, the US have sent at least 10 balloons over our airspace.
Yeah.
Just all of a sudden they've announced it. I mean, if that was happening before, China would be right bang on announcing that and saying what the US doing. It's almost like, well, you started it first, so that's why we did it. Anyway,
Yeah,
it's a pain in the butt, but good news headlines anyway. We'll see what happens. Anyway, away from dodgy aliens, let's get rid of that mug there. Right, let's get stuck into it. Quick look at last week's data and some more bonanza jobs numbers from Canada this time. Expected 15k employment change came in 150k. Another big reading there, although the prior month was revised lower. As you can see there, full-time employment did the heavy lifting there, which is good news because this full-time, part-time can be a bit of a revolving door. Obviously, if you see a trend of full-time employment coming in, that's stronger than if it's all part-time employment. The unemployment rate stayed unchanged, was expected to tick up, but as you'll see there, a jump in the participation rate, quite a strong one to 65.7, which usually can have the effect of raising the unemployment rate as more people come in looking for work. They may not be employed, but there's more out of work people looking for work, and that can then raise the official unemployment rate. But in this case, it didn't. It stayed where it was. So strong number all round. Over in the US, more strong numbers from the Michigan, the first number of February, 66.4 for the headline there. Up 1.5 pips over last month, beating expectations there. Current conditions looking good. Everyone feeling chipper in the States, and inflation expectations pushed up as well. So something for everybody there for inflationistas. Potentially consumer expectations for inflation still remain quite high, which is something central banks look at, because if people think prices are going up, they buy now and don't buy later. So it has an effect on activity, why they want to keep expectations well anchored, as they constantly say. So soft landed numbers there again, and it keeps the market thinking that the Fed may be going, continuing the hikes and possibly beyond the current ceiling expected. Right, coming into some of the headlines over in Japan, the ruling LDP, or Japan's LDP policy head, that's one of the parties, says that monetary policy has room for reform. This is a secondary story running with the Bank of Japan. Once we get the new governor, they're going to look at the frameworks and things like that and decide whether they need to tinker around with the mandate that the Bank of Japan has. Further on what we know regarding the new Bank of Japan head, we're likely to get the nominations tomorrow. That's said to be around 11 a.m. Japan time, which is 2 a.m. GMT, if my numbers are correct. Following that, we already know that potentially they will have confirmation hearings on the new governor in the lower house on the 24th of February, and that's been reported that they'll have conversations or confirmations in the upper house on the 27th. So these are just quizzing the new guys, whoever they may be, over what they intend to do. So that's where we may get the full implications from the new people going into the Bank of Japan as to where they stand on monetary policy. I'm not sure how it works tomorrow, whether we're going to get any quotes from anyone, particularly from the Bank of Japan. We'll probably get quotes from Kishida and other party members and things once those nominees are announced, but I'm not sure if the press will be banging down the doors of those who are in the frame. We shall see tomorrow. Suzuki, Finance Minister Suzuki was out saying that the risk of interest payment surge is growing. So something that he's got to manage, depending on what the Bank of Japan do. If rates do start going up, it seems like the market will obviously push rates up, trying to in yields, which is going to put pressure on the fiscal side of monetary policy, particularly what the government does. Obviously, lots of fiscal measures, lots of borrowing, of which the Bank of Japan owns most of it, and interest payments will go up, and that will put pressure, obviously, on the finances of Japan. Coming over to Europe, and on Friday, ECB Schnabel said, in order to achieve our 2% inflation target, we will continue to raise interest rates, and we are unable to thrive as an economy if inflation is too high. Needs to see robust evidence underlying inflation is returning to target in a timely and durable manner. ECB's cost says as energy prices fall, fiscal support must be reversed. Failure to reverse fiscal support would risk restoking midterm price pressures. Quite a strange one from DeCoste, because one of the ECB's constant moan-ups is that governments need to do more fiscally to help economies along. But now he's worried that the measures they've put in place, particularly on energy bills and things like that, is going to be a problem thereafter, and wants that support withdrawn as quickly as possible. ECB's Visco says the ECB must avoid unnecessary rise in real interest rates. Again, a little bit opposite to what Powell's told us from the Fed, that he wants real rates all in the positive. Well, he wants to avoid unnecessary rise in real interest rates. De Guindos says rate increases beyond March are going to depend on the data. ECB Centino says inflation is going down faster than we expected. The decisions to be data dependent beyond March, and that the new forecasts are going to be very important for policy, as they always are with these guys, even if they're wrong most of the time. Smaller hikes would need midterm inflation nearing 2%, and March forecasts will help determine a peak rate. So maybe we will find out where the ECB see rates going to as a top. Over to the UK, BOE's Peel said household inflation expectations are elevated. And I think they're going to continue to stay that way personally. He says UK labour market risk leaving inflation persistent, so worried about potential wages coming in there as well. You know my view on the UK. I think the BOE is going to get caught out with inflation. It's not going to come down as fast as they expect, and could even continue rising. And energy bills, wages are going to put a lot of pressure on that. And if they think rates are going to be stopping soon, I think they might be wrong. Wouldn't be the first time. BOE's Haskell says the role is to ward off second round inflation. So at least one of them is wary about those effects. Fed's Harker last week says the Fed needs to get above 5% and then pause. but doesn't see the need, or the Fed doesn't see the need for 50 basis point hikes right now. To the big man himself, Powell will be popping up for his biannual testimony before the Senate Banking Committee on the 7th of March. So pencil that in your diaries. Usually 2 appearances, 1 in each committee for each different house and party. Usually a load of waffle, but the market will get all excited about what he might say about monetary policy. It's usually just a repeat of the last FOMC statement and whatever's gone on, and then he gets questioned by the powers that be. And for you crypto followers, the SEC's Gensler says that crypto exchanges are generally not following SEC rules. So expect to get a lot more, or hear a lot more from those guys, the SEC in the US, regarding the various crypto entities not doing what they should be doing on the regs front. That's all I've got for the pretty easy one this morning. Stel, you got any bits and pieces other than aliens and when we're all going to get ballooned to death?
No, I think you covered it. Not much. It was a pretty quiet weekend, actually, and we're all heading towards tomorrow's Valentine's Day massacre.
Yeah.
Or whatever it's going to be. No, so
Kay, man. Oh, they brought you back, Kay. We thought you'd been abducted by aliens, mate.
No. I'm closely following Balloon Gate.
Balloon Gate.
Balloon Gate.
It's all about birthdays and I mean birthday parties, and then those balloons get lost in the sky, and everybody's making a big deal out of it.
Exactly.
Yeah.
Well, let's have a quick look at what we've got coming up this week in the data front. Not too much, but we have a few bits and pieces. We've got UK labour data tomorrow, so obviously keep an eye on those wages numbers within that data there. The first flash reading of GDP from the Eurozone. We're getting further away from Q4, so that data is going to matter less and less. CPI tomorrow for the UK, so inflation kicking off there. Obviously, sorry, the CPI in the US coming in as well tomorrow. That's going to be the big number for Tuesday, as well as what's going on in the Bank of Japan. Retail sales in the US, Empire, the first manufacturing data of the new month coming in from the US there. And we get some housing data on Wednesday as well. Jobs data from the Australia coming in, so that needs to be looked at from the RBA. And while we're talking about the RBA, there's a bit of messing around going over there with Governor Lowe. Apparently a week or so ago he had a meeting with some hedge funds, i.e. hedge funds, where he was said to off the cuff remark that rates may be going higher that they expect, possibly even up to 5%, and that's caused a bit of a hoo-ha in Australia because those comments weren't publicly made and insinuated, as I say, that rates were going far higher than what the RBA have been telling the public. Those comments have weaseled out, so he's in a bit of hot water. He may be forced to leave, and one of the people coming in is potentially Guy Debelle, who was at the RBA some time ago. He was in his own little scandal, which he's moved away from, to do with Fortescue. So if Debelle comes in, it's a bit of an old hat coming in rather than anyone new who may change things up. But we'll keep an eye on that situation anyway as it moves along. Over to Thursday, more housing data, starts and permits. The second piece of manufacturing data from the US from the F.A.C.E. Fed, PPI data, which will take may add or take away from what we get from the CPI tomorrow. Obviously not as big as CPI, but it will give an indication potentially that things are moving in the same direction, or maybe the direction's changing. It could be a little bit choppy for markets because if CPI falls as expected on Tuesday, and then we get a hot PPI, that may suggest that inflation pressures are coming in. So that may undo some of the moves we see from the CPI data. So one to keep an eye on there as well. And Friday's a bit of a quiet one, really. We get UK retail sales, French CPI, and some import-export prices from the US. So we're quite into the week for that one there. Right, let's get it stuck into what's going on in markets. Dollar yen, pretty much on the yield bus again. We're having a little move up towards those recent highs near 133, getting up to that 132, 89, 90 area. A bit of a zone we've got here, some old fibs moving up there. Yields are really driving the bus this morning. One thing that has been coming out regarding Ueda in Japan is that they've been picking up every person who's worked for him, studied under him, the paper boy, his postman, as to what sort of policy he may start to talk about when he takes over. So those headlines have been coming up, and they've all been on the easy side of the street. But yields really the main driver this morning, keeping well up at the moment into that 3.7%. We've got various levels that we've seen before, up towards 3.8, 3.9. And if we get above there, then we're looking at the fours and whether we can maintain that rally up there. Coming into some of the shorter term numbers, again, still maintaining their gains in yields, looking a bit perky. The 1 year's, getting right up towards that ceiling number, the 5%. So really on the short term, we are looking a bit more bullish as far as where the Fed may go than the pivoters were driving previously to that. There's really not much else going on anywhere at all. Euro dollar's holding below this 107, which at the moment might be a bit significant. But I'm loath to read much into any of these price moves at the moment, because obviously the data tomorrow, and we could be anywhere. We could be back at 109, we could be at 105. It's one of those situations. So not really looking to take a side on any of these at the moment. One pair, obviously, I keep a close eye on because of my long-term longs, is Aussie dollar. We had a minor test of this zone overnight, this former resistance zone that's now become support, held on a first touch. I still get the feeling that we might be having a look a bit lower. So I'm going to be looking to see if we break under here. 50 seems to be a bit of a line in the sand for that. But if we get through this area here, I want to see it holding this time, confirming a break, because prior times we've popped below, it's not lasted long, and we've gone back above again. So any real break, I think, needs a confirmation rather than going with a first part break on that one. Another pair I'm in, finally moving my way, is dollar China, and that's moving up. Had a little test of that 6.84 level, not breaking it at the moment. I'm long from a little way lower before. Kay, you still looking this one as well?
Yeah. I've been done a bit overnight on the balloon story probably. But yeah, I'm still in it. Just we'll see what happens on tomorrow's CPI. I think 678, 79 should hold. If not, we're out of there. But it's now a free trade anyway, so that's pretty cool into tomorrow's CPI. And top side, looking at where your thicker line is there, 690.91. It's going to be the other side to look at. I guess it's pretty evenly poised now. I reckon there's as many chances going up as going down. That's why it's always good to take a little bit of profit. The one interesting thing towards the end of the week, if we would not have such a big move in dollar China, is that we're expecting the China's LPR, right? In over the weekend, they always like to put it out over the weekend so we can have a nice gap come Monday.
Yeah. So that's one well remembered. Is that the MPR or the LPR? Which one we getting? Do you know?
The LPR, I think. Go back onto your. It was on your news calendar there.
How much on there? Which one?
You see on Saturday, Sunday, China.
Oh, there we go.
Non-prime rate. Yeah.
I'll never look at Saturday or Sunday, but yeah, there we go.
We'll have a closer look at that towards the end of the week.
Yeah, I'm not sure what's expected there. I haven't got any expectations for that one. Well, yeah, we'll have a sniff around of that, see what's going. It's not often a market mover, but I think if they do cut it a bit, that will play into what they've been, or some circles have been saying that they might look to ease this quarter or next quarter. So we'll see. Could be a little bit of a mover next week. So yeah, dollar one is one I'm looking at as well. Oil's looking a bit interesting too. We had a move up to 80. It failed at a bit of a minor level around 80.50. I'm still wondering if we might get a move up to this 82.50. And I think maybe if we get some strong manufacturing data from the US, that could kick it up a bit from those Empire and Philly Fed numbers, because that may suggest that some of the stuff we've seen in the manufacturing sector of late, which has been a bit soft, may be turning the corner. Conversely, it could confirm that maybe we're getting a bit of divergence again between manufacturing and services, because obviously it was services that was the gangbusters one the other day on NFP day. Manufacturing still looking like it's lagging behind, so we'll get to see whether there's going to be a bit of a bounce there, or if manufacturing is still going to suffer. Other than that, I think it's just above the middle of the range. We've had this double bottom down here, so it's had a little move up. I think we're just going to wait and see what happens from that point. Update on dollar Hong Kong, not a lot to report. Hugging the line still at the moment, still remains short up there. It can be one that you have to sit in for a while, as we can see previously when I was in it late last year. Had to sit and wait. But I will be looking for moves down to 84.50, 84, just to chip pieces off, put some money in the bank and reload if it goes back up again. Who wants to take it? Kay, Stell, either of you want to have a little look around?
Up to you guys.
No, Stell, if you have stuff to show, yeah, I mean, please be my guest, man.
No problem. Well, I'm gonna just take a quick overview of stuff.
The one thing, while Stell is loading up his screens, is on oil. You were talking about it. I find it like quite volatile, right? If you okay,
think
we're not doing the $130 or $60 moves, but or levels, I mean, but it's $10 is or $7-8 in a day is pretty big moves. So that tells me that the market is really wondering what to do, really, because if OPEC would open its mouth on any how shall I say, a compensation for those Russian cuts, oil could easily be back to 72.5. If in turn they say like, well, I mean, we are happy with the way it goes, and we are not going to up the production or output, we could be at your 82.5. But it's going quite quickly. The one thing I note though is that it seems that these 78.5 is a bit of a magnet lately. It tries to decide whether to stay above or below. That's WTI, of course, I'm talking about.
Okay. All right. Okay. So let me take a very quick overview of where we are ahead of the CPI. Yields seem to be, I always start with yields, and they seem to be breaking out on the 10-year US. Of course, if we didn't have this number tomorrow, which I've said all along, this is the most important number of the month, then we'd be talking about, this is broken out, etc. We're going higher, no doubt about that. But obviously tomorrow's number is a big question mark, and we've talked about the change in the calculation method that takes effect this month for the first time. So going from a 2-year sample to a 1-year sample. And my view is that this is going to take the number lower than expected. We're expecting 6.2, down from 6.5 year on year on CPI, and I think it's going to be well below that. Of course, I could be wrong, but my logic and my calculations lead me to think that way. So although yields are breaking out, I am not I'm still taking this with a pinch of salt because we could easily come right back down, make this a false breakout, and then all hell could break loose if we have a very low print. So this is what the 10-year is doing. The dollar is trying to rally. It has rallied a little bit from the lows, but it's been a very, very steady drop from September, basically, of last year, from the 114s down to, what was it, just below 101. So it was a pretty consistent and constant move lower. We are trying to rally. We have rallied a bit. We are now consolidating. We're on the 50 DMA. So again, tomorrow's number is going to be the direction. If inflation comes in line or even better, then I think that the dollar is going to go towards the 200 DMA, which is in the 106s. And it would be a nice little pullback. Actually, let's see, what kind of pullback would that be? Whoops, there we go. So that would be the 38.2, right? So that's not a bad target if we do get a good number tomorrow. So the dollar is trying to rally. The euro is, so obviously the euro dollar is obviously the opposite of the DXY. So we are in support on the 50 DMA. So let's not look at that one too much longer. Euro pound, I still think 90 is a target. We almost got there a few sessions ago. We could chalk that up as a check. We hit the target, but I still think we have one final push towards a 90. Then after that, it's going to depend on a lot of things. I am actually looking for the next sterling pair to short. So basically go short sterling against something else. I haven't decided yet. The Aussie looks pretty decent. So if sterling Aussie is kind of consolidating, it's getting capped by the 200 DMA. 50 DMA is also moving lower. This is a range, an area of interest. It's been for a while. So I think if this gets rejected, we're going to be heading towards the 165s again or somewhere around there. So this is another one I'm looking to potentially switch into as a short pound trade, but I haven't done anything yet, and I doubt I'll do anything ahead of tomorrow. Norway is another one. I'm just going to keep going with F.A.C.E for now. Norway is another one I really, really want to trade, but it's been, and always I trade NOK on the long side. So short Euro Norway, dollar Norway, but it's been trading very, very well, very strongly. So I'm not going against that right now. The dollar Norway is actually, these lines I've drawn, I'm not 100% sure about them. I always want them to be more than 2 points. The support is probably a lot more stronger as a level than resistance, but I think anywhere close to this trend line or these previous highs, provided that there's no big beat in U.S. inflation, I think I'm going to try and take a short on that. But otherwise, not looking that much more in F.A.C.E. There's tomorrow's number is really going to be driving everything, and I think I'm going to wait for that first. So stocks, well, the S&P again, just like yields, it seems to have broken higher, and technically this was a pretty important trend line. We have all these moving averages below as well. It's a tough one. I think if the number disappoints tomorrow, which I think it will, then I think we're going to take out these highs, and 43 to 44, 4300s is these lows here, these highs there. So it seems to be a nice round level that gets a lot of traffic. So I think if we do have a bad number, but it has to be a bad number, right? It has to be a low number. Then I think 4200 gets taken out pretty much possibly in the same day. And then we head towards 43, 4400. So patience on this. Obviously, if inflation is sticky and it remains high, then stocks I think are going to be under tremendous amount of pressure, because the markets have been playing chicken with the Fed. The Fed keep telling us that, look, rates are going to go a little bit higher than you're expecting, and they're going to stay there for a lot longer than you're expecting, Mr. Market, and the market just doesn't care. So slowly we are starting to reprice a little bit more of this higher for longer or flat for longer, but we are still pricing cuts by year end, which the dot plot does not show that. They definitely not. So will the market cave or will the Fed cave? It's going to be data dependent, and I tell you what, if the market finally decides that this is it and that rates are going to be higher for longer and flatter for longer, then I think equities are going to be on a strong downtrend and potentially testing these lows at 3,600 in the S&P. I think that's it's not unrealistic. We've come to a place where there's a lot of it's like a tug of war, and it's been going for a while, and there's a lot of power from both sides, and when one side goes, we're going to see a huge snapback towards the other side. So I don't think, I think this number is going to bring a pretty big movement either way. And I hope it does, because we are traders. We like to see volatility, and we want to be able to trade that volatility. The worst thing possible would be to get a number in line or maybe 0.1 lower. That would be quite disappointing, because I think in that case, we're not going to see that much action.
I'm gonna disagree a little bit there,
okay.
Because I think we've always got to look at what's the market doing going into these numbers, and yields, the dollar, been a little bit more bullish on the Fed aspect. So I think even if it doesn't drop as much as expected, I think that's going to play into those hands, and maybe we see a further lift in yields in the dollar, because those guys aren't getting evidence that they're wrong, if you know what I mean.
Yeah, maybe, yeah. Yes, yeah, okay, fair point. Okay.
Didn't mean to throw you off your balance.
No. It's a I respect the opinion, and I disagree with it. No, I don't disagree with it. I think it makes sense what you say, and as I said before, I think it's going to need to print a little bit far from expectations to really make a mark on the markets, but which I think it will. I could be wrong, but I think it will to the low side. But anyway, only 24 hours to go or so. Cryptos, well, there's more stories about regulation of the SEC. They're starting to fight it a little bit, the whole crypto environment, and more regulation will come eventually, especially when you get things like FTX and all these black swan events, which are supposed to happen once every 20 years, and they happen once every quarter. Oh, sorry. And so we are consolidating, and again, tomorrow's number, if it's strong, then we're going to see a big reaction from cryptos, because they're a high beta risk proxy. They have been, at least for the last couple of years. So it was a nice run from 16-ish K to 24 by Bitcoin, but now it's all about tomorrow. So I keep repeating myself about tomorrow, but really this is going to be driving everything, because yields drive everything, and the Fed drives yields. It's as simple as that.
Bit of a dead cat bounce. Is that in Bitcoin, do you think?
Well, again, could be tomorrow. I mean, I don't know is the answer, because tomorrow could drive it up 10%, literally, or down 10% in one day. So I don't know is the answer. Yeah. All I know is 24K is huge. If we break that, then it's bullish. End of story. On the other hand, if we break below 20K-ish, these two moving average, this was an area of interest around 21 to 21 and a half, has been for a while. If we break below, nice big round number, 20K, I think then we're going a lot lower. We're going to be testing these lows at 16 again. That's it. Let's see. Let's hope for something nice tomorrow.
Yeah, where I do agree with Stelios is that we have corrected in the dollar, and then we have corrected in those yields, but I think we are at I'm not going to say huge crossroads, but we are at important levels, both in currencies and yields, in my opinion. So tomorrow, if the market decides to take a side, that could be a pretty thorough move that we are going to see on the dollar, on yields, on various instruments.
Yeah. Dead slap bounce. Nice. I like that code, Bran. Dead slap. Splat bounce.
Ryan,
yeah.
do you want me to share a bit of stuff which maybe...
Yeah, go ahead, mate. Go ahead.
Yeah, all right. I'm going to first show the dollar yen, because I think we are on pretty important levels going into tomorrow's possible double whammy or saloon doors, or how one may call it. And so not only we've got those resistance levels that capped again last time around 132.85, but we also have the bottom end of the daily cloud. So not only outside Japan takes, but even Japanese takes are going to be really closely eyeing this 133. It comes in at 133, give and take a pip. So keep this one in your mind. It is an important level, and even if we would trade above it today, I would not start to trade it right now, because it could just be a false break, and then tomorrow we get a double whammy to the other side. What I do want to say though about yen is that so far, assuming that Ueda is going to be the one, and they don't grab another rabbit out of the hat tomorrow, assuming that it is Ueda, he's now being painted as a dove. For sure, after what he's been saying so far, he doesn't look like to be the big reformer. And we've already had, as Ryan was saying, people from the Japanese government or the Ministry of Finance saying like, yeah, but we must monitor very closely what's going to happen to our finances. So there, I think we have to look at why we had this move back up from the lows and then a continuation overnight. It's not only US yields. So for tomorrow, keep a close eye on this 133, where we are going to close above or below. If it's above, then we have our next level where we halted before, anywhere between 134.5 and 135. So that's going to be important for tomorrow, I think. Personally, as I said, I haven't seen him talk about being a big reformer, but whatever happens, and we've been saying that a couple of times already, Bank of Japan is trying at least to get out of these very strict yield curve control, negative interest rates. So I think unless data in Japan tell us it's an absolute disaster over there, I do think we have a fair chance of seeing more, call it normalization, or call it like getting out of the most extreme dovishness. I think it will continue, but then it will depend on how fast. And there, I think there is room for disappointment on the speed of with which Bank of Japan and Japanese official dom is going to get out of those strictly dovish monetary policy. So I personally, unless I see US data really start to disappoint, CPI collapsing, but I'm really more looking at economic growth data than CPI, and there we've had the opposite happening lately. The data have been better. I might start to really have my bias again a little bit more towards buying dips in this dollar yen than leaning on rallies. For the time being, I think we are in a range. It's just a range. It's 130, 133 for a starter, and then the 134.5 and 135 above there. If we get above 135, then I think there's another 300 points there. But that for what's to happen tomorrow. Euro dollar, no, I'm not even going to take too much of a stance on it. My level is still 106, 106, 15, 20. And then the top side where we held before and we're starting to gap now. Okay, we've had a little move through it, but then reversed. So call it 107.70, 108, and then 106, figure 15, add 105.85 perhaps. 30-point zone on the downside, 30-point zone on the top side. I think that's where it's going to be decided tomorrow. Sorry for the noise in the background if you hear any, because they haven't found a better day to start to break up the street here and resurface the street in our area. So yeah, here's the machine. Another one I'd like to look at, and that's taking us away from the dollar, but we do have UK data and we do have European data out this week. So the euro sterling is an interesting one. Opinion hasn't changed. I think we still ought to have to see this 90 test, and in the meantime it's done okay. We haven't really tested, but we came close enough to test this trend line and the supports we are seeing here between low 88s, 88 and a quarter. We've tested it and we're holding. That's a good thing for those who think we are going to move higher. We haven't gone for any stop losses or whatever. It's been a bit of a slow grind, but we've seen a 50-point move already from the lows. So in percentage terms, that's already pretty decent. That's more than a 0.5% move. So intermediate resistance just above where we are now, 78.80, 80.82, and then if it would go back above, then we are back into the 89.10.20, which I've been talking about a lot of time, saying that's the gateway for 90. We fell just short and then disappointed a bit, but I think there's a fair chance we are still building a base here now. Of course, the big panic zone hasn't changed so far, but we are building a decent base here to perhaps retest the 89 at least. You were talking about the Norwegian kroner earlier. This zone here, which held, fell a little bit short of where I thought we may end up, but we've had a pretty solid rejection in the euro Norway, of course helped by the recovery in oils, gas not doing that much unless I missed something. But why not have a retest of those lower zones? I've seen Norwegian banks also talk about this 1065 zone in euro Norway. It's still like a 1.5% away, but we can't rule it out that we are going to get there. If we start to break back above 1080, 89, 91, then we're probably in for a retest of the highs. Dollar Norway, if you want to trade it, you could do it on both ends. Your 1040 that you showed there on your screen still is a bit of a level, just above 1040. There is a bit of a level, and we have seen this trade in the past as well. So respect that level, I'd say. It came down pretty hard from there, thanks to higher Norwegian CPI as well. That came out, and the oil rebound. The big zone to me is still going to be anywhere between 970 and 978, but we're a bit away. Look at what's happening in the low 10s for now. Whoops. The other one that I'm going to have a look at is the mix. Okay, we've had Mexico raising more than expected, CPI going better than expected. I think there's another number. I think it was the investment money also coming in was slightly better than expected. So the mix has fully benefited where other emerging markets couldn't. It seems that the emerging market flows are quite concentrated into Mexican peso. Now, overnight I saw that Citibank is seemingly nearing the sale of its Banamex Mexican retail bank Banamex to one of the other Mexican-based investor. So we may have a little bit of M&A coming up, but we never know what the structure of those M&A deals are. So it looks as if the value of Banamex is estimated around $8 billion. So yeah, it could have it could and it will have an impact the day that they have to repatriate the dollar, Citibank, but we never know when a deal is being done until it's done. So the structure may be put up before the sale is announced, and likely will be put up before the sale is announced. So if you ever see a bit of a spike in the dollar mix, which is not data driven in the upcoming days or week or so, which is not data driven, that could be this M&A going through. So just want to keep to bear in mind if we see this kind of move. In the global picture though, this is still looking weak, and it does look, unless the dollar really flies away, it does look that sooner or later we will have a retest of this 1850. I'm not a big fan of being short dollars, so for me the game is still in Euromex, and that has responded really well to Banxico. We are trading 2% lower, and unless we're starting to go back above 2013, 2025 initially, putting it more in a how shall I say, less bearish picture, more equally balanced picture, this could still be in for at least a test of these 19.75. Why not lower 1960s or 1950, where we have a bit of this traffic zone. But in the meantime, respect the 19.75 if we get there, because it's been a bit of a bounce level and things in the past. But the global picture hasn't changed. Still getting paid to be short, and I like it. Unless US data really come off sharply, and we are heading into a deeper recession, which is not the global picture, I think the being a neighbor of the US and partially its manufacturer again, since the US is trying to move away from China, is going to keep the MEX one of the better currencies, I think, for the carry trade play at least. I'm not in rand, but it's coming into the resistance zone here, just above 18. They are struggling with the electricity supply again, which is the Achilles heel of the economy in South Africa. And on the dollar rebound, it's really the South African rand really suffered. So I'd say keep this 18.05 in mind for when we go in for after tomorrow's US CPIs. I don't think, let me have a quick look, that there's any South African data coming out tomorrow ahead of the CPI. No, I don't see any. So it might be a case of the US CPI driving this and an interest rate move if US yields are on the move. And cable, yeah, I'm still respecting. No, that's my dollar rand again. Why am I not? I'm still respecting this lower zone here. I think we have to in the 119, starting from 119.80 all the way down. Well, all the way down to 119.60, 50. I think this is going to be a relatively important support zone. So we've got possible double whammies for the sterling, because we got sterling data out this week. We've got, of course, the US CPI out. It could be a double negative for the sterling, but I still would respect this mid 119 to 119.80 zone on the cable. This is going to be a decider for this week. Top side, we are going to have to look at what happens around 122, 122.15 if we get the double whammy to the other side. Intermediate level here 121.0510, 121.40, but I don't think that on data as important as they will be, this is going to be a level of interest at all. I don't think so. So, have you shown gold and silver, Stelios? I don't recall.
No.
No, oh, he's gone.
He's gone.
Silver is a bit in danger here. We are trading below, even though close to the 22.15 zone, which I thought was going to hold up until CPI, but we are a little bit below. So I'd say watch this zone going into tomorrow as well. If we start to go back above 22.10, 22.30, then we may have a valid reason for thinking this is going to go back up, but it should happen on a much lower than expected CPI out of the US. If in turn it's not giving us anything, why not envisage a move back down to 21 or even below? Gold, no interest at all right now. We're in the middle of the ballpark. I'd say from 1845 down to 1835, there we should find perhaps a little bit of support into the CPIs, and then the top side is 1900, right? So that's it, and that's it for me today, Ryan.
Thank you very much, mate. Thanks for all that analysis there, and to Still as well, he's been abducted now, so we'll see what happens there. Yeah, just so I can't help but reiterate what the guys have said as well. There's a lot of things going on tonight and tomorrow with the CPI data. It's all going to be about the yen for the Bank of Japan stuff. So when you're looking to trade, just look to see if things are going to get moved out of kilter. The yen is going to drive a lot of the crosses, and they're going to drive a lot of the majors if it's big moves we see on the Bank of Japan stuff. So it's not a question of just, oh, everything's about the dollar or everything's about the yen. You're going to see other pairs moving as well. So it's going to be a little bit of a washing machine, perhaps, saloon doors, as Kay says, the next couple of days. So just be very careful. Don't get sucked into a move. If you're in a trade and you get a news headline spike or whatever, and it puts you in profit, just think about taking some of that money. If it gives you a good move, like 50, 60 pips out of nowhere, and you're at the right side, take some off the table, put it in, because you could get some data that reverses it all thereafter. So it's all about making sure you grab those opportunities and put that money in the bank as you get it. And lastly, this was put up last night in our chat room by Gavin. If you want to trade getting taken over by UFOs, you can trade UFO gaming versus Tether, which saw a spike last night or yesterday on all that news coming out that more unidentified flying objects have been shot down around America and elsewhere, Canada and whatnot. So a spike there on that. So there's your asset to trade, apparently, if you want to trade an alien invasion. Good luck with that one. Until tomorrow, good people, have a great day, have a great week. Thanks, Kay. Thanks, Dale. We will see you all bright and breezy tomorrow.
See you all.